Hello and welcome to the FT headquarters. Today I have with me Patrick Mange, Head of APAC and Emerging Market Strategy at BNP Paribas Investment Partners. Our subject for the latest video in the expert series is investing in emerging markets. Hello, Patrick.
Hello.
Whatever people say about emerging markets, Patrick, about their strength, about their important position in the world, particularly the BRICS nations, their equities have underperformed developed markets for the last 3 years. Do you expect that to change in 2015?
Yes, I would expect this to change in 2015, despite the fact that we have a few events which will be of quite importance. The Fed rate hike probably as expected today. But yes, I believe emerging markets this time will outperform.
And will there be a catalyst that will actually make that happen, or do we have a big confluence of factors here?
I mean, probably we have more a big confluence of factors than a real catalyst. There's a few elements that are probably overlooked today, which will be watched a little bit more closely. Which is the fact that emerging markets today are relatively cheap compared to their developed peers. That's certainly one element that will be taken into account moving forward, particularly as earnings growth is starting to pick up again. I mean, in the recent past, during the last underperformance, we had basically GDP growth slowing down. We had commodities like it is the case today, sliding last 3 years, starting 2011, basically, and we had earnings growth, which was not heading north, but rather heading south in most of the markets, and particularly in some emerging markets. So if this changes, particularly earnings growth moving up, growth becoming a little bit more positive on a world base, though very uneven, as we know. Inflation not a big problem and liquidity remaining quite plentiful, there's really no reason to believe that emerging markets will do badly, and probably good reasons to believe that they will do better than developed markets.